The financial landscape is undergoing a seismic shift as a record number of active exchange-traded funds, ETFs, flood the market, collectively amassing a staggering $100 billion in assets. This surge in active ETFs is reshaping investment strategies and challenging the traditional dominance of active fund managers. Among the rising stars in this space are systematic, options-based strategies, offering a new dimension to investors seeking enhanced returns and risk management. In this article, we delve into the reasons behind the active ETF boom, the impact on active fund managers, and the growing popularity of systematic, options-based approaches. The active ETF revolution. Active ETFs, which combine the flexibility of active management with the tradability of ETFs, have seen an unprecedented surge in popularity in recent years. The current year, has witnessed a record-breaking number of active ETF launches, surpassing all previous benchmarks. Investors are increasingly drawn to the benefits of active management within the ETF structure, such as real-time pricing, intraday liquidity, and tax efficiency. One of the driving factors behind the active ETF boom is the desire for alpha, the excess return of an investment relative to the return of a benchmark index. Active ETFs, as opposed to their passive counterparts, aim to outperform the market by employing skilled portfolio managers who make strategic investment decisions. As a result, investors are flocking to these vehicles in the hope of generating superior returns in a rapidly changing market environment. The active manager's dilemma. While the rise of active ETFs is a boon for investors seeking alpha, it poses a significant challenge to traditional active fund managers. These managers, accustomed to overseeing mutual funds and other actively managed vehicles, are now faced with the threat of asset migration to the more nimble and cost-effective active ETFs. The traditional active management model, with its higher fees and lower transparency, is losing its luster as investors increasingly demand a more efficient and cost-effective approach to active investing. As a result, active fund managers are compelled to reassess their strategies, reduce fees, and enhance transparency to retain and attract investors. The systematic approach, navigating options-based strategies. The adoption of systematic, options-based strategies within the realm of active ETFs represents a paradigm shift in the approach to portfolio management. This innovative trend is gaining momentum as investors increasingly recognize the potential of leveraging the derivatives market to optimize returns, manage risk effectively, and access a unique spectrum of investment opportunities. Algorithmic precision in options trading. At the heart of systematic, options-based strategies is the integration of algorithms and predefined rules into the investment process. This approach fundamentally transforms the decision-making process, replacing human intuition with algorithmic precision. By employing mathematical models and automated systems, these strategies systematically execute options trades, offering a level of discipline and consistency that is often elusive in traditional active management. The utilization of algorithms allows for the removal of emotional biases that can impact investment decisions. Instead, systematic strategies rely on data-driven analysis and predetermined rules, ensuring a more objective and rule-based approach to navigating the complexities of the derivatives market. Transparency and consistency. One of the distinctive features of systematic, options-based approaches is the transparency they bring to the investment process. Investors are provided with a clear understanding of the rules governing trade executions, risk management, and overall portfolio construction. This transparency contrasts with the opacity that can be associated with certain traditional active management strategies, where decision-making processes may lack clarity. Consistency is another hallmark of systematic strategies. The predetermined rules ensure that the investment process is consistently applied, irrespective of market conditions or emotional influences. This consistency provides investors with a reliable and predictable framework, fostering confidence in the strategy's ability to adapt and perform across various market environments. Democratizing options trading. Historically, options trading was perceived as a complex financial instrument reserved for sophisticated investors. However, the rise of systematic, options-based strategies is democratizing access to options trading, making it more inclusive for a broader investor base. The use of algorithms simplifies the execution of options trades, making it accessible even to those with limited experience in derivatives markets. This democratization of options trading is a pivotal development, as it empowers a wider range of investors to leverage the benefits of options, including income generation, risk mitigation, and portfolio efficiency enhancement. As a result, investors who may have been previously deterred by the perceived complexity of options can now incorporate these strategies into their portfolios with greater ease. Strategic advantages of options-based strategies. The appeal of systematic, options-based strategies extends beyond accessibility. These approaches offer a diverse set of strategic advantages that align with the evolving needs of investors in dynamic market conditions. Income generation. Options can be strategically employed to generate income through premiums. Systematic strategies can systematically execute covered call strategies or employ other income-generating options techniques, providing a potential income stream for investors. Risk mitigation. The disciplined use of options allows for effective risk management. By employing protective strategies such as buying puts or callers, systematic approaches can mitigate downside risk, providing a level of protection during market downturns. Portfolio efficiency enhancement. Options-based strategies can enhance overall portfolio efficiency by optimizing risk-adjusted returns. The systematic execution of options trades allows for precise tailoring of risk exposure, aligning the portfolio with investors' risk tolerance and return objectives. Risk management and enhanced returns. One of the primary advantages of systematic, options-based strategies is their focus on risk management. By incorporating options into the investment process, these strategies aim to protect portfolios from adverse market movements and limit potential downside risk. This risk mitigation aspect is particularly appealing to investors, especially during times of heightened market volatility. Additionally, options-based strategies offer the potential for enhanced returns. Through the strategic use of options, investors can generate income, amplify gains during bullish markets, and protect against losses in bearish markets. This dynamic approach allows for a more nuanced and adaptive investment strategy, aligning with the ever-changing nature of financial markets. Challenges and considerations. Despite the promising prospects of systematic, options-based strategies, there are challenges and considerations that investors should be mindful of. The complexity of options trading requires a thorough understanding of the derivatives market, which may pose a barrier to entry for some investors. Additionally, the potential for losses exists, as options trading involves inherent risks that may not be suitable for all risk appetites. Moreover, the success of systematic, options-based strategies relies heavily on the efficacy of the underlying algorithms and rules. Investors should carefully assess the track record and robustness of these strategies before committing capital, as suboptimal execution can lead to significant underperformance. Conclusion. The $100 billion ETF flood and the rise of active ETFs mark a transformative period in the financial markets. Investors seeking alpha are presented with a plethora of options, and traditional active fund managers are forced to adapt to this new reality. Within this landscape, systematic, options-based strategies offer a compelling alternative, combining the benefits of active management with the precision of algorithmic trading. As the financial industry continues to evolve, investors and fund managers alike must navigate the complexities of this changing landscape. Whether through the adoption of active ETFs, the exploration of systematic options-based strategies, or a combination of both, the key to success lies in a deep understanding of the market dynamics, a commitment to transparency, and a disciplined approach to risk management. In an era defined by innovation and disruption, those who embrace change and harness the power of evolving investment strategies are poised to thrive in the ever-evolving world of finance.